Vance, it's good to have you on with us. Just take us through whether or not you think this market and this economy need another big jumbo rate cut heading into the 2025 first quarter.
Hey, good morning, Dom. We're going to get one no matter what because the data is showing that we need one, and unemployment, I think, is the big factor in this. Inflation's starting to drop. It's an interesting thing about interest rate cuts, though, Dom, is because when you go back and you look at the track record, usually what you'll have happen after the first rate cut is a little bit drop down, especially in financials, and we're starting to see it play out almost textbook. But then you start to see it start to move higher. Usually after a first rate cut, the market's higher 7 out of 7 times. But if you go back on the market and you look at the first half of the year, which was up 10%, that tells us that the odds of the second half of the year being up is 83%. Those are very good odds. So I think investors really need to stay the course. And in some ways, just look at the market, not at all the data coming out, because the data is sort of just noise right now.
If the data is just noise right now, how then do we play, or how do we strategize around how you set yourself up in a portfolio heading into the new year, given what we've seen already in terms of market volatility and some of the key sectors to watch?
That's a good question. I think everything that did poorly in 2022, you need to start looking at now. You look at utilities. Utilities are starting to move higher and higher and higher. Look at real estate. Real estate's really benefiting from the drop in rates, and it should continue to benefit as investors pile into that investment. VNQ is a really nice ETF for the real estate sector if you want to play that on a broader scale. But also look at some of the interesting sectors in the bond market. A lot of people are overlooking the convertible bonds, and CWB is a very good convertible bond ETF, which is continuing to move higher. But Dom, anytime a market hits an all-time high, that is the most bullish technical signal you can have. That is incredible strength. So investors need to be buying on pullbacks, and they need to be very optimistic.
If they are going to be buying on pullbacks, where exactly, besides that convertible bond market and elsewhere in credit, could they look towards? Are there particular sectors that you think are going to be more at play, given this kind of broadening out theme that we have playing out in the markets?
I think financials are going to get strong. I think as you look at XFL and, play that in a sector, I think financials are going to do well. Historically, after the first rate cut, financials will drop back down a little bit, but then they continue to march higher and higher and higher. And again, the ones that we mentioned earlier, utilities are looking good. Real estate's looking good in V and Q. Technology is still going to be a favorite. You still need to stay invested in the technology sector. It's just not going to go away. It's only going to get better. I think JP Morgan's looking strong. And I also was looking at NVIDIA this morning, Dom. If it breaks out of a triangle pattern, you could see NVIDIA come back up to new heights. So I would still stay bullish on the semiconductor sector also.
And just a couple moments left here. How about healthcare? It's been a focus for a while now, given hearings on Capitol Hill just yesterday. Where do we see that healthcare trade?
I think that it's going to move higher. I think you've got a lot of interest in that healthcare trade. But, like when you get congressional hearings up there, they're always going to make a big noise about how they're overbilling, they're overcharging, they're making too much money. It's the same rhetoric. But everybody's going to need it, and everybody sort of charges into the healthcare sector, which I would be bullish on.